Tell you what, we are joined by Debashis Chatterjee, who's the MD and CEO of LTIMindtree, who's joining us on the show. Hi, thank you so much for joining us, Mr. Chatterjee. Mr. Chatterjee, tell us, how would you rate your quarter two performance? Do you think it's in line with your targets or slower than what you were penciling in?
I think the quarter played out fairly well. If you remember, we called out at in the last earnings that the momentum that we developed in Q1 should continue into Q2, and with a 2.8% sequential growth, we have certainly seen the momentum continue into Q2. The other thing which has played out very well for us in this quarter is the growth is fairly broad-based. If you look at the industries in which we operate, across all the industry verticals, we had sequential growth. So which means that the growth has been fairly broad-based, and which is exactly what we are looking for. That's very positive for us as far as the quarter is concerned. And even on the margin front also, we were able to uplift our EBIT to some by 50 basis points.
Right, Mr. Chatterjee, this is Snehi also joining in the conversation. Now, your quarter one momentum was largely built up into quarter two. On the back of this performance that you've seen in quarter two, would you believe the momentum will build up further going into quarter three as well?
As far as Q3 is concerned, we know there are certain seasonalities in Q3, and as well as there are some furloughs which come into play, lesser number of working days. So keeping all those things in mind, we are cautiously optimistic about the momentum that we have developed and continuing into Q3. And some of the headwinds that historically we have seen, we need to cater to those. We need to account for those.
Right. So, Mr. Chatterjee, the headwinds that you mentioned for quarter three, then are you looking at a slower second half versus the first half, or do you think both of them are going to be on par?
There are very strong deal wins. There are quite a few deals which are in the final stages of closure. We have also announced a large deal, which is $200 million plus in the US in manufacturing vertical. So some of these ramp-ups will happen, so which gives us the confidence in terms of the momentum continuing into Q3 as well as for the rest of the year. That's what we mean by the momentum, because we are very sure about the ramp-up of these deals. As far as furloughs are concerned, we had an exceptionally severe furloughs last year around the same quarter. I don't think we anticipate that kind of furloughs. So when from the furloughs, it will be regular furloughs that we normally have in a Q3. So that will be also a bit positive. But having said all these things, it's a little difficult for us to call out straight away till the end of the year, because there is also an US elections which is overhanging on everybody's mind. So keeping all these things, and that's exactly what we mean by cautiously optimistic. Momentum is very good, no doubt about it. We have, as I explained, the momentum will continue, but the headwinds are also there, which we need to take into account.
Right, and also speaking about these headwinds that you mentioned, do you think margins are also going to be affected by these headwinds in quarter three due to the seasonality that we're seeing and also on the back of wage hikes?
Well, I don't think I want to call out a margin range, but I just want to call out two things. Philosophically, we have always said that we have a very robust program in place which will help us to take the margin, increase the margin gradually over a period of time. And that's something which we will continue to do. And that's a framework that we have within the organization. There will be certain headwinds which will come, like in Q3, we'll have the wage impact, which will be at 200 basis points, which will be obviously offset to some extent by the operational efficiencies that we'll gain. So our intention is to slowly improve the margin as we go along. But in terms of calling out specific numbers, it's a difficult task. But whatever we are sure about in terms of headwinds like the wage hike, it's good to call it out, and that's what we did.
Right. Mr. Chatterjee, talk to us about the deal wins in the pipeline currently, and which are these segments that are leading the growth?
Well, I think the deal pipeline is very robust, and the bulk of the deals that we are seeing in the pipeline are efficiency-led, cost takeout kind of deals. I won't say that the discretionary spend is fully back. I think we are still waiting for the discretionary to come back at some point of time. Just take an example of financial services where we had seen a 4% sequential growth. And if I just look at that industry vertical, again, the deal wins are mostly cost takeout, but in two ways. One is there are deals in which we are benefited as a part of the vendor consolidation. That means we have been an incumbent in that particular account, and we have benefited as a result of vendor consolidation. And there are also situations where we have got a seat on the table in a brand new logo, and we have won that also as a new deal. So there are these two areas where we have won in. BFS is just an example. The one deal which we announced in manufacturing, which is a $200 million plus deal, that's again a combination of renewals as well as new scope from other incumbents, almost 50-50. So there are quite a few deals, and the specific to BFS, I can say that there is a lot of work that's happening in the regulatory governance and compliance, and that continues. So that is also helping us. But overall deal pipeline is very strong. Bulk of the deals are cost takeout, efficiency led, and we are very well placed, and we are very confident that that will help us to the rest of the year.
All right, well, that sounds good. But Mr. Chatterjee, geography-wise, do you want to call out any specific trends, the differences that you're seeing in the European versus the US markets, and also with the overhang of the US election just being around the corner, what are you spotting between both of these key markets for you, Europe as well as US?
Well, I think, from a geography standpoint, rather than looking at it quarter to quarter, we should look at the overall year. And if you look at our overall geography split at a broad level, US still contributes to 74% of the revenues, which is growing very well. And Europe can be a little, Europe and rest of the world could be a little soft in one of the quarters. But overall, we still feel that the growth that we are seeing across the geographies is fairly broad-based.
Right. Also, do you see any possibility of a double-digit growth in FY26? Could you weigh in on that?
The momentum that we have developed in the first half of the year, we expect the momentum to continue, but we are cautiously optimistic. So if you take all these things into account, you can see that probably just calling out a double-digit growth at this point of time is a little will be a little ahead of time if you try to predict. But our intention is always to grow well, grow at the rate the industry is growing, or do better than that, and be in the top quartile. But at this point of time, we are cautiously optimistic, but at the same time, the momentum is there.
All right, Mr. Debashis Chatterjee, thank you so much for joining us. That was the management of LTIMindtree weighing in on their Q2 numbers and the growth outlook going ahead. That stock not doing pretty well on the back of an underwhelming set of numbers and also some bearish brokerage notes trickling in this morning. But on that note, we'll slip into a very short break on this edition of Market Fatafat. When we return, we'll keep it going. In fact, we'll kickstart with all the big buzzers in today's trade. So you stay tuned.
If you like this video, then like, share and subscribe to ET Now.